Alright, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. Alright, morning Ren, hi, good to see you. Of course, yeah, lovely. We'll cover the cable and Aussie as well, but of course, we'll start the analysis with the dollar index, right? But of course, before we start dive into the chart and trading view, let's take a quick look at the disclaimer. Alright, hi Bob, good to see you as well. Alright, please take note that this is marketing communication. It does not contain and should not be construed as containing investment advice or investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, please take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital and you should only trade with money you can afford to lose. Right, my name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been a finalist for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, so before we dive into the charts and trading view, let's take a quick look at the economic calendar for this week. Right, there's quite a few things going on, but I just would like to highlight retail sales out of the US that's out tomorrow, 16 July, Tuesday. We've also got the labor force report from the UK. That's on Thursday, 18 July. And of course, we have the ECB monetary policy announcement on that same day as well. Right, so here's the calendar from Forex Factory. And I'm on GMT time here. All right, so tonight we've got Federal Reserve Chairman Jerome Powell speaking at an event in Washington DC as well. We've got inflation data out of Canada tomorrow, for along with U.S. retail sales. Right, that's at 12:30 p.m. GMT, Tuesday, 16th of July. We've also got inflation data out of New Zealand, the UK. We also have employment labor force report out of Australia as well. Claimant count change, that's out of the UK, that's at 6 a.m. GMT time, Thursday, 18th of July. And of course, we have the monetary policy statement by the ECB on Thursday, 18 July at 12:15 p.m. GMT, followed by the press conference by ECB President Christine Lagarde at 12:45 p.m. Right, taking a closer look at US retail sales. If we look at it on the monthly and annualized basis, we can see some cooling in retail spending. Right on the left, I have the chart for monthly sales, and on the right is the annualized sales. So looking at the latest result, which came in May, sales edged up 0.1%, which was below forecast of a 0.2% gain, while April's result was also revised lower, down to 0.2%. In short, this wasn't a very strong sales report out of the US for the month of May. And when we look at the forecast for June, when we look at retail sales, when we look at the forecast for headline retail sales, it's showing a decline of 0.2%. Right, so we're expecting June's figure to drop by 0.2%. And not only that, when we look at the annualized reading, we can see that the pace of or the rate of increases sales has started to slow down as well. Right, what we saw in 2023 pretty much was consistently strong growth on an annualized basis, and of course this strong acceleration going into the last quarter of 2023. However, 2024 is pointing to a slower retail spending, and that's also being highlighted by the current forecast for June as well. So should we see retail sales miss expectations once more, we could potentially see the US dollar come under pressure. Right, now looking at the UK labor force report that's out on Thursday, 6 a.m. GMT time. So claimant count change is a metric that measures the number of UK citizens that are filing for unemployment benefits. So if you have a large increase in claimant count change, it signals a potential weakness in the UK labor market, and that could potentially have a negative impact on the pound. So as we see here for the month of May, right, well, before that, for most parts of 2023, we saw claimant count change coming in approximately under 12,000 every month. However, May saw a huge spike of 50.4 thousand. Now, June's forecast is showing claims of 23.4 thousand, which is of course much lower than May's spike, but nevertheless, it is still higher, much higher than the 12-month average as well. Right, so we could have a scenario where we can see higher than expected claimant count change. Plus, we may also see the unemployment rate edge up higher, right? So you can see here back in December of 2023, the unemployment rate in the UK was around 3.8%, and it has climbed quite strongly to hit 4.4% in April, which is the highest reading since September 2021. Right, so you can see unemployment rate has started to edge up. Claimant count also spiked in May, and June's forecast points to another elevated reading. So we have a potential scenario where we get another uh, weak labor report out of the UK, which could then potentially function as a bearish catalyst for the pound. And finally, we have the ECB on Thursday as well, right? So after cutting the main refinancing rate by 25 basis points in June, right? They cut it from 4.5% down to 4.25%. Uh, they are now expected to keep rates on hold, right? Despite moving ahead with the first rate cut in June, the ECB is now expected to hold the rate at 4.25% because they have not gained sufficient confidence that inflation would drop towards their 2% target by 2025, right? So take note, although they did move ahead with the first cut in June, it does seem like they're going to maintain the uh, main refinancing rate at 4.25% at the latest meeting. As you can see here as well, even on Forex Factory, the forecast is for the ECB to keep rates on hold at 4.25%. All right, okay, now let's dive into the charts on TradingView and start the analysis with the dollar index. Right, as we speak now, we can see the dollar index is actually testing a very critical support level. Right, this is a strong pullback support level that's been in place since 5th of April, right? Since the first week of April, we see a nice pullback taking place here in the first week of April, a swing low bounce taking place in mid-May, another swing low bounce taking place in the first week of June, and we currently see the dollar index is once again testing this strong pullback support level at 104.07, which has been identified as the pivot. There's also a presence of a 61.8% Fibonacci retracement. So this retracement was found by starting from here, this swing low on the 8th of March, going up to the swing high here on the 16th of April. We can see the 61.8% Fibonacci retracement aligns pretty well with the pullback support, which has been identified as the pivot. A little bit below, we can see another strong pullback support level taking place on 21st of March, dropping as low as 103.24, and this level also has the presence of a 78.6% Fibonacci retracement. Now, if we do see the dollar index stabilize around the pivot here and around the 61.8% Fibonacci retracement, we may see a potential bounce as well. We may have a potential to see the dollar index stage a minor rebound, right? But for now, it is testing a pretty critical level, and if we do see let's see whether this level can hold. So we may have a potential bearish breakout opportunity as well, right? Although I think we should see dollar index perhaps bounce a little bit today, because this is indeed a very strong technical level here that's accompanied by the 61.8% Fibonacci retracement. We however cannot rule out the fact that we may also have a bearish opportunity as well, a bearish breakout opportunity. So if that bearish breakout does occur and we see the dollar index move or break under 104 very cleanly, then we may see it drop towards the first support. So that means if we do see the dollar index make a clean break underneath the pivot here, we have a potential short opportunity as well, and then we can target the take profit level at slightly above the first support at 103.24. So with the first support at 103.24, identifying your take profit level at about 10 pips above the first support would be a suitable level to do so. Right, and looking at resistance here, there's a nice pullback resistance level that's taken place on the 9th of July at 105.12, and this level here also has okay, with this level was valid in earlier this morning, because earlier this morning, if you guys had looked at the charts as well, we saw the dollar index bounce quite strongly this morning, right, during the Asian trading hours. However, we have now seen the dollar index reverse and drop back towards the pivot again. So previously, as price was rising, right, I had drawn a Fibonacci retracement starting from this high here on the 28th of June, going down to this low, which was the Friday's low, and we can see that this pullback resistance level here also has the presence of a 50% Fibonacci retracement. However, with price reversing now and dropping towards the pivot and perhaps maybe even breaking through the pivot, right? This Fibonacci retracement may no longer be valid, so take note of that. Right. All right. Hi, Ruth. Good to see you as well. Okay. Right. So if you're expecting the dollar index to be weak today, then of course, then we can expect currency pairs like the euro, the pound, Aussie, and Kiwi to be rising. We can also be expecting gold prices to be lifted as well. Right. So take note. These are the key levels for the dollar index on the daily time frame. Right. Now let's take a look at cable and Aussie as well. All right, Ren. We'll take a look at that. And after that, I'll move on with the other major currency pairs, and we'll also look at the commodities such as gold and oil as well. Right, so looking at cable here, we can see it's after finding a pretty decent support at around 1.2620 towards the end of June. This currency pair has risen very strongly, breaking above a previous swing high resistance here on 11th of March. This swing high resistance was at around 1.2860, right? And then the next resistance was around this pullback level here. There's a pullback resistance level here taking place on 27th of July, where price looks to be testing currently. And of course, when we look at it, when we zoom out and look at it, we see a very nice swing high resistance taking place here in July of 2023, right? So these are all significant resistance levels here, and this is how we can identify potential. This is where we're going to identify our first and second resistances for cable. Right, so first resistance is where price is currently trading, which is this pullback resistance level here that's taken place on July 2023. So it's quite clearly this is the first resistance here. And if we do see cable break above this level, right, we may see it rise up towards here. So in fact, this first resistance can be identified as an upside confirmation level as well. Right, it's an upside confirmation level as well, which means that we may have a potential bullish breakout for cable here today. Right, and of course the first resistance is simply going to be this swing high that's taken place in mid-July of 2023. Now what about support? Right, um, we can see that previously this level here, this swing high, oops, it's my brush, this swing high resistance level here functions as a strong support in June as well, right? This was a swing high resistance in the second week of March, and where this is also a level where the cable once again ran into resistance in mid-June as well. So what was previously a resistance level can now potentially function as support. So right, this is the level where the first support has been identified. Right, so first support for cable is at 1.2858. All right, hi Andres, good to see you as well. Right, and then looking at support, I see a decent pullback support level here that's taken place on 9th of July and 10th of July. So that's where the second support for cable has been identified. So for today, it does look like, because with the dollar looking very weak, we may have a potential bearish breakout opportunity for dollar index. And then when we look at it on the cable, that does look like to be a bullish breakout opportunity as well. So should a bullish breakout does occur, right? If it does occur here today, or perhaps maybe even early tomorrow, we can then target the first resistance. Well, we can target close to the first resistance as our potential take profit level. So the top of this wick here is as high as 1.3141, and the body of the candle here is about 1.3135. So identifying the take profit level at about 10 pips underneath the first resistance would be a suitable area to do so. Right. Okay, I think we can try and run some Fibonacci extensions as well. To find extension levels, we will use the retracement tool, starting from this high here on 12th of June, going down to the low here on the 27th of June. The key extension levels lie at 127 and 161%. And we can see that the upside confirmation level also has the presence of the 161% Fibonacci extension. So let's keep that level on. So if we do get a strong break above the upside confirmation level and the extension at 161%, this is very likely going to signal to us that we may have a very strong bullish momentum for this currency pair, and then it could potentially rise up at least towards 1.3125, right? Just give yourself a 10 pip buffer underneath the resistance if you want to identify a suitable take profit zone for any long cable positions here, right? I believe you can also run a Fibonacci projection, right? Let's try that. Projections involve 3 points. So the first point is going to be starting from here, this swing low on the 22nd of April, going up to the high here on the 12th of June, ending with the low here on the 27th of June. So projection levels key projection levels sit at 61%, 78.6%, and 100%. As of now, we don't see any of these levels. Okay, 61% has already been surpassed, so it's no longer valid. But when you look at 78.6 and 100%, they don't really align very well with the upside confirmation of the first resistance, so it doesn't matter. So usually try not to force the Fibonacci level onto our analysis, right? Unless we also have a corresponding resistance, such as this swing high resistance here on the 13th of July, as well as this pullback here as well, right? When we have uh, a resistance zone accompanied by the Fibonacci retracement, right? That of course means we have more significance to the strength of this resistance zone here. But for now, because these projection levels do not align well with the first resistance and upside confirmation, it's fine. We do not need to always incorporate the Fibonacci analysis into, or the Fibonacci retracement levels or projection levels into the analysis. All right, so take note, we have a pretty decent bullish breakout opportunity for cable, and there's I think one more uh, extension we can find, or maybe a couple more extension levels we can find. Right, we'll start from here, running a retracement from this high on 8th of March, going down to this low on 23rd of April. Let's look at 137 and 161. Nope, okay, that's fine. It doesn't align well, so that's fine. All right, okay, so take note. These are the key levels for cable here. All right, now let's move on over to Aussie, right? And of course, do not hesitate to drop your request in the chat box here, like what how Ren has does. He has requested for analysis on the cable and the Aussie. And should you wish to see any other currency pair, whether it's a major or minor, the commodities or even the indices, right? Do drop your requests in the chat box here. Right, looking at Aussie, we can see that since 16th of May, since middle of May, this level here at around 67.05 function as a pretty strong resistance level or pullback resistance level, which finally got taken out on the first week of July. And since then, price has moved up quite strongly. And the next major resistance for the Aussie looks to be at this swing high that's taken place at the end of December 2023. Right, this is a very significant swing high resistance level at 68.46, which has been identified as a pivot. So we've seen a bullish breakout take place for the Aussie at the end of the first week of July, and this bullish momentum has continued. And perhaps should we see further momentum for this currency pair, we can expect it to reach close to the pivot level here. So identifying your take profit level for any long Aussie positions at about 10 pips underneath 68.46 would be a suitable area to do so. Right, so we are probably expecting we can expect the Aussie to climb higher, especially right if we do see this bearish breakout occur. So take note, the dollar index here will give us a good indication of whether we can see a bullish breakout for cable, right? Whether you see a bullish breakout for cable, and at the same time whether this bullish uptrend in the Aussie is going to extend even further here, right? And where we do expect to see it stall is around the swing high resistance that has taken place at the end of December of last year. Now, if we zoom out a little bit further, we can see a multi-swing high resistance, the first of which took place on 15th of June 2023, and the second one in mid-July as well, 2023. So this is a very significant multi-swing high resistance level, which is at 68.92, and this is the level that we are going to use to identify as the first resistance here. So take note once again, should you have any long Aussie positions here, the momentum looks to be strong. And if we do see the dollar index make a bearish breakout below the pivot here, it's quite likely we're going to see the Aussie make a strong run towards the pivot, towards its own pivot at 68.46. So identifying take profit level for long Aussie at about 10 pips underneath the pivot would be a suitable area to do so. Right, let me see if there's anything else to incorporate into the analysis. I think this is fine. Probably not, nothing much else here. If anything, maybe there's a projection we can try and use. Let me try. Let's start from here. Point 1, October 2023. Going up to point 2 here, December 2023, and ending at point 3 here on April 24. Right, we can see the 78.6% Fibonacci projection, aligned quite close to the pivot or the swing high resistance that's taken place at the end of December. And let's see if there's anything else. 61 is here. Okay, we already seen the Aussie climb above 61.8%, so that's not valid, and 100% is simply too far from where price is currently trading. So let's just keep 78.6 on hand. Here we go. And just highlight this as a zone, strong resistance zone as well. Right, so anywhere from 68.30 onwards would be a good area to identify as a suitable take profit zone for any long Aussie positions. All right, okay, now let's move on over to gold. Let's take a look at a commodity, right? This precious metal here, right? We can see that this price level here at around 2,450 is the all-time high for spot gold prices. This occurred on the 20th of May, right? And since then, gold prices have sort of pulled back, ranging between $2,300 per ounce and approximately $2,375 per ounce. But after last week, we've seen gold prices rebound quite strongly, and it does look like to have run into resistance close to the all-time high here. So that's why this pivot level at $2,431 per ounce is actually like a multi-swing high resistance, and the first of which taking place here. This is a pullback resistance taking place on the 12th of April. We have a swing high resistance taking place on the 20th of May, and it does look like price has stalled once again last Thursday as well. But take note, if we do see the dollar index break below this pivot here to trigger a bearish breakout, then we are quite likely to see gold prices also potentially at least rise up towards the pivot and maybe even make its own bullish breakout through the pivot as well. Right, we've also run a Fibonacci retrace projection here starting from this low on 3rd of May, going up to point 2, which is 20th of May, and ending at point 3, which is 7th of June. We can see the 78.6% Fibonacci projection aligns very well with the multi-swing high resistance, and at the same time the 100% projection sits slightly above the all-time high here as well. Right, so with gold prices remaining elevated, it is currently testing a very significant resistance area here. So however, if we do see, especially if we do see dollar index break below this pivot here, we are quite likely to see gold remain elevated and push at least close towards the pivot. Maybe we may even have the opportunity to see a potential bullish breakout occur for gold over the next couple of days as well. Right, with regards to the support, I see a nice pullback support level taking place over here at around $2,355 per ounce. This happened at the end of the first week of July and the beginning of the second week of July. And this level also has the presence of a 50% Fibonacci retracement. Right, we started this retracement from this low here on 26th of June, ending with the high on the 11th of June. You can see the 50% aligns very well with this pullback support. Actually, if I were to extend this first support, is almost like an overlap level here, right? We can see gold prices are running into resistance here on 21st of June at around $2,360 per ounce, after which it pulled back, and when it made a strong bullish breakout here, it found support on 8th of July and the 9th of July, stabilizing above this level to create an overlap before finally bouncing higher as well. So the first support is actually a strong overlap support level that has the presence of a 50% Fibonacci retracement. All right, so these are the key levels for gold. And also take note, once again, we're going to take the cue from the dollar index, right? If we do see this index break below the pivot level at 104.07, right? If we do see a nice clean break under 104, we are very likely to see a strong bearish breakout here for this index, and that would mean we are also likely to see cable break above its own upside confirmation level here. So we have a potential bullish breakout for cable. We also have a potential for the Aussie to rise up towards its pivot here, which is a multi-swing high resistance level, significant multi-swing high resistance level. And at the same time, we could also potentially see gold prices remain elevated as well. All right, okay, now let's take a look at another commodity, and this time it's going to be XTI USD. XTI USD is the instrument that tracks the WTI crude oil futures. Now, looking at this commodity, we can see that crude prices have rebounded quite strongly since the beginning of June, right? It dropped as low as about 70, almost $72 per barrel, stabilizing around $73 per barrel here in beginning of June, and to rise as high as almost $85 per barrel at the beginning of July. Right, and since then, pretty much last week we saw gold prices pull back quite sharply in the first half of last week, and then it staged a strong rebound on Wednesday and Thursday, but Friday saw a big down candle as well. WTI oil on Friday hitting a high of almost $84 per barrel before reversing sharply to close down on the day at around $82.40 here. Right, so since 20th of June, we can sort of see WTI oil or XTI USD trading in a sideways pattern here. It's ranging approximately between $81.10 and $84.90 per barrel here. So we can see that we are experiencing some sideways price action for this commodity. Right, some sideways price action for this commodity here, and it does seem to be respecting this range for now. So if we do see XTI USD pull back towards this support level here at $81.12. Remember, this support level here at 81.12 has been identified as a pivot. If it does reach this pivot once more, we may have a potential bullish bounce for XTI USD, right? And if it does bounce off this pivot level here, we can target the first resistance at $84.98. So slightly below this resistance level here, we can identify a suitable take profit zone. Right. We've also run a Fibonacci retracement starting from this swing low here on the 4th of June, going up to the high on the 5th of July. Right. Let's see if there's a level that aligns with the pivot. Okay, maybe we can keep the 38.2%, right? That's a pretty decent 38.2% retracement level just underneath the pivot here. Right, and then we look a little further below. There's a nice little pullback that's taken place here as well, or some price consolidation has taken place in the second week of June, second and third week of June, with XTI USD stabilizing around $78 per barrel before resuming the uptrend here. Now this consolidation level functions as a pullback support level, which also has the presence of a 61.8% Fibonacci retracement here. And of course, when we look at resistance, we see a nice pullback here taking place on 26th of April. And of course, as recently as last week, we saw XTI USD not once, but twice it has run into resistance at around $85 per barrel once again. And when we look across this level here, there's also the presence of a 78.6% Fibonacci retracement. This retracement was found by starting from here, this swing high on the 5th of April, going down to the swing low on the 4th of June. You can see the 78.6% retracement aligns pretty well with this pullback resistance level here, which is at $84.98. Right, so take note for XTI USD, we have a potential bullish bounce opportunity for this commodity. Should it reach this pullback support level here at 81.12, which has been identified as a pivot, and if it does, and if price stabilizes around here, we may have a potential bullish bounce opportunity. And if that were to occur, we can then target a zone that's slightly underneath the first resistance at $85 per barrel. So maybe around $84.90 per barrel is where we can target a potential take profit zone for any long XTI USD trade should we see a nice bounce off the pivot here. All right, let's see what else. Let's cover the indices as well, right? We've covered a few of the major currency pairs, a couple of the commodities. Let's now move on over to the US 500, right? So the US 500 is the instrument that tracks the S&P 500 futures, and we can see that since April of this year, we've seen equity markets, U.S. equity markets rebound very strongly. And when we zoom out a little bit further, we can see that since October 2023, this has been a very significant bounce in the indices, right? In the level of the indices here, right? So when we look at US 500, it actually made a new all-time high last Friday, right? A new all-time high for US 500 is around 5,656.90, and we can see this instrument is trading pretty close to this all-time high here as well. So what this means is we have nothing in the past to reference, right? There's no other swing high resistance or pullback resistance that we can identify, right? So in this scenario, we have to rely on Fibonacci tools such as Fibonacci projection levels or maybe Fibonacci extension levels to help us identify the next potential resistance area. So that's what we've done here. So in this, for the US 500, we've actually used the Fibonacci projection starting from here, this low from point 1, 27 October 2023, going up to point 2, this high on the 1st of April 2024, and ending at point 3, which is this low here on the 19th of April. We can see that let me just pull up all the fibs first. And let me just adjust the labeling so we can see where all the labels. So we can see that 61.8% Fibonacci projection is where the all-time high was formed yesterday. So it actually ran into resistance at exactly the 61.8% Fibonacci projection last week, right? And this is the level now that's currently being tested here. So we may have like some upside confirmation level here as well. And we may see the US 500 break above the 61.8% Fibonacci projection here, right? And we're going to use the 78.6% Fibonacci projection to identify a potential pivot point, and the resistance is going to be identified at the 100% projection here. So you can see here, US 500 is trading pretty close to the all-time high, which was identified by the 61.8% Fibonacci projection. And now we're using the 78.6% projection level to help us identify the next potential resistance area here. So should we see a strong bullish breakout occur for US 500, we can then potentially target this pivot level here at 5,850 as a potential take profit zone, right? And of course, we can then use the 100% projection level to help us identify the next resistance as well. All right. Although this level between the 78.6% projection and 100% projection is pretty far, right? It's a pretty wide gap here, but we may be able to identify something a little bit more closer, and we can do that by running another projection. So this time, this projection is going to start from this point here, this low on 19th of April, going up to point 2 on the 23rd of May, and ending at point 3 here on 30th of May. All right, okay, you can see that 100% projection for this from this part here actually aligns very well with the 61.8% projection as well. So this is quite a critical level here, right? Okay, so let's just keep 100%. Okay, there we go. Right, so we're seeing very strong moves for US equity markets, and there's also a pretty decent ascending trend line that I can plot here as well, right? We can see that US 500 has bounced off this trend line several times, right? It's bounced off here on at the end of April, at the end of May, and then again at the beginning of July as well. We can see that US 500 has respected this ascending trend line several times, and it could also be another area where we can identify for potential entry as well, right? So if we do see US 500 pull back slightly, right? And if it does continue to respect this ascending trend line, the trend line itself will help us identify a potential buying opportunity as well. Right, okay, so these are the key levels for US 500 on the daily time frame here. And first support has been found by running a retracement from this swing low here on 19th of April going up to the all-time high. We can see that the 23.6% Fibonacci retracement aligns pretty well with this pullback level here at 5,449, which has been identified as the first support. All right, hi Shal, good to see you as well. Thanks for tuning in. All right, okay, so we've covered that. Let's cover the DEX as well, right? So DE40 is an instrument that tracks the DEX future. So let's take a look at this as well. Even DEX has made an all-time high here at around 18,916 back in the middle of May, and it's a level where it looks like it's going to rise into once more. So we can see DEX has also risen quite strongly in the second half of last week, and it could potentially rise up into this all-time high resistance here. So for those of you who may have been long on the DEX since the second half of last week, identifying your take profit level at around the pivot of 18,873 is a suitable level to do so. And this pullback resistance level here also has the presence of a 61.8% Fibonacci projection. This projection began from here, this low on 19th of April, going up to 0.2, which is the all-time high on the 16th of May, and ending at 0.3, which is here on 14th of June. We can see the 61.8% Fibonacci projection level aligns very well with the all-time high, and then we're using the 78.6% projection level to help us identify the next potential resistance. Remember, take note, DEX is also trading close to its all-time high, so there's nothing in the past that we can reference. There's no swing high resistance such as this one here that took place on 28th of March. We don't have this pullback level here on mid-December as well. So once again, in such scenarios, we have to rely on Fibonacci tools such as projections and extensions. We can even run an extension here. Right, to find extension levels, we simply run a retracement starting from here, this all-time high, 16th May, going down to the low here on 14th of June. Key extension levels sit at 127 and 161%, and we can see that the 127 extension level aligns pretty well with the 78.6% Fibonacci projection here. So we have a very strong resistance level here at around 19,150 to about 19,200. And should this index continue to climb higher, right, then of course the next resistance area can potentially be found at the 161.8% extension level, which is around 19,545. So take note, we could see the DEX climb higher as well. We could see the DEX climb higher today as well. And should you already have any long positions on this instrument, take note there's a strong resistance level close to the all-time high, which also has the presence of a 61.8% Fibonacci projection. So potentially you can identify your first take profit level at around the pivot of 18,873. All right, now let's go back to the majors, right? Let's look at dollar yen, right? This is dollar yen's interesting as well because last week on Thursday, there was suspected intervention action by the Bank of Japan. So what is an intervention action? That's when the Bank of Japan will sell its foreign holdings, such as the US dollar and US treasuries, and then use the proceeds of those of that sale to buy back the yen in the open market. So this has been confirmed by the end of last week as well, or over the weekend, and the Bank of Japan did intervene in the open market once more, which caused a sharp reversal in the dollar yen as well. We can see dollar yen was trading at around 161.70, and it reversed sharply to drop as low as 157.50. Right, you can see a huge move down on Thursday and Friday as well. But for now, as markets reopened earlier this morning, we can see dollar yen has stabilized around 157.70. So this pivot level here is a pretty decent pullback support level. This level at 157.71 previously functioned as resistance here at the end of May, and now looks like to be functioning as a pretty decent support level, and we also have the presence of a 50% Fibonacci retracement. So this retracement level was found by starting from here, this swing low on the 3rd of May, going up to this high here on the 3rd of July. We can see that 50% retracement level lies just below the pivot here. So I see a strong support zone here where we could potentially see dollar yen stabilize here. So should we see this currency pair stabilize at around 157.70, we have a potential opportunity to for bullish bounce for the dollar yen here, right? And looking a little bit below, I see a nice pullback support level that's taken place not once but twice. First on 16th of May, and then again on the 4th of June here, right? It's a very nice support level that has been respected and that's been in place since the 15th of May. And at the same time, we have the presence of a 78.6% Fibonacci projection, Fibonacci retracement at this level here, close to this level as well. Right, so if we do see dollar yen bounce off the pivot here, we can try and identify a few potential take profit levels. We can do that by running a retracement from here, this high on the 3rd of July going down to the low of Friday. Let's pull up all the fibs. Then we can see that we can probably use this zone between the 50 and 61.8% Fibonacci retracement to help us identify the first take profit zone for any potential bullish bounce for this currency pair. Right, we can see here on 5th of July and 8th of July, right, Friday and Monday, dollar yen pulled back slightly but found support above 160.25 and climbed higher for the next 3 days. Right, so this, what was previously a pretty decent pullback support level, could now potentially function as resistance. So any nice bullish bounce off the pivot here at 157.71, right, we can then target or identify our take profit level or zone between the 50% and 61.8% Fibonacci retracement. All right, okay, right. Before we move on further, I'm just going to quickly launch a poll and truly appreciate it if you guys can give your feedback with regards to today's webinar. Here we go. All right, just launched the poll on YouTube here. I truly appreciate it if you guys can give your feedback with regards to today's live trading session. All right, okay, now let's just continue with the analysis. Right, we've covered the dollar index, we've covered Aussie, dollar yen, XTI USD, spot gold, DEX, and US 500. Is there anything else? Right, if DXY is going down, should USD, right, okay, hi Bob, yeah, that's a very good question. Right, that's a very good question. But because the yen is very weak, right, if you look at it, the yen has been one of the weakest G7 currencies this year. So, well, not only this year, but since 2021, right? You can see when dollar yen moves up very strongly like this, it means the yen has depreciated very strongly, and it highlights the significant weakness in the yen as well. So you're absolutely right. If we are expecting dollar index to drop lower, typically you would also expect dollar yen to fall as well, right? But because the yen is already so weak, there's perhaps a potential that we may see a slight rebound in dollar yen. It may not be the strongest bounce, of course, but yes, we might see a potential bounce in dollar yen as well. Yeah, you're absolutely right that we should be expecting dollar yen to be falling down as well, because if that's what we expect for dollar index. However, we have to take note, dollar index is actually a basket, right, that measures the strength of the US dollar versus its peers, right? So the basket is made up of the euro, the Japanese yen, the Swiss franc, what else is there? The Swedish krona, and I forgot what's the last one. Oh yeah, the pound, the cable as well, right? So it measures the relative strength of the dollar versus 5 other major currencies. So despite dollar index falling, right, it doesn't mean that all the other currencies in those basket are going to be strong. In this case, the yen is quite weak, so we may see potential bullish bounce here for dollar yen. So it's something that is not out of the ordinary, right? Okay, let's see. What else is there? Right. All right. Okay. Thanks everyone for the feedback. All right. That's great. Truly appreciate it. For those who have responded as well, thank you for your time. Right. Okay. And let's see. Okay. So this is what we have for dollar yen. So let's take a look at dollar franc as well. Right. So we can see here. Let's just start with a fresh page here. Clean slate. So right. So if we see here, dollar index dropping lower, right? We can expect dollar franc to be weak as well. So I can see a nice swing low support here that's taken place, right? There's a nice swing low bounce taking place that took place here on 18th of June. There's a strong support level here, so this is where I would identify the pivot for dollar franc at about 88.40. Then looking a little bit further below, there's a pretty decent pullback support level here that's taken place on the 22nd of February as well as on the 11th of March at 87.42. So this is where I would identify the first major support for dollar franc. Now we can also run a Fibonacci retracement starting from this swing low here that occurred on 28th of December last year, going up to the high here on the 1st of May. We can see that there is 50%, or let me just pull up all the fibs first. Let's see, pull up all the fibs. Right, we can see there's a 50% here that aligns quite close to the first support here, and we can quite see here there's a nice pullback level here that's occurred on 14th of February till the 29th of Feb at around 87.85. So this does looks like to be a pretty strong support zone for dollar franc. So take note. So if you are shorting the dollar franc, right? If you, because we are seeing weakness in the US dollar, we're seeing weakness in the dollar index. So if we are going to, if we have a potential short position on dollar franc, right? We can then target this pivot level at 88.41 as a potential take profit zone, right? So remember, after running into resistance here on the 2nd of July at around 1940, dollar franc has moved lower in steps, right? You can see a series of lower highs and lower lows here, right? Quite clearly, you can see a very nice series of lower highs and lower lows as well. In fact, actually, this is actually a very nice channel. I believe like this is like the beginning of a pretty decent channel that we have here. This is a nice bearish channel for the dollar franc. So we can probably expect this bearish momentum to continue, and if it does occur, right, you can target close to the pivot at 88.40 as a potential take profit level for the short trade here. So anywhere around 88.50 would probably be a good idea to identify your take profit level for the short dollar franc trade here. Let me just highlight this a little bit more clearer. Right, there we go. Right, we can we'll just keep 50% Fibonacci retracement. We can remove all the others. And of course, looking at resistance, right, we can see that there's a pretty decent pullback resistance level here that's taken place on the 10th of July at 9000. Thus we can identify the first resistance here, and of course we can identify the second resistance at this swing high or pullback resistance level that's taken place at the beginning of June at 1944. Right, hi Bob. Okay, yes, okay. I'm not actually an Elliott wave practitioner here, so that's why I don't incorporate Elliott wave analysis into this session here. But if you do see it, that's great, right? Elliott wave is not something that I practice, and which I do not use in my analysis as well. So that is why I have not placed it here. But you're right. If you are an Elliott wave practitioner, right, you can definitely incorporate it into your analysis. And if you do see the Elliott wave pattern 5 here, and along with the ABC pattern, right? I think that's great that you have identified that as well. But I do not use Elliott wave, right? Just to yeah, just to be clear. All right, okay, let me see if there's anything else. All right, we can also run one more retracement starting from this level here, 22nd of May, going down to this low here of 18th of June. I believe there's a 61.8% retracement that should align well with the second resistance. Right, okay, it's already surpassed. All right, we can see that price is already moved above the 61.8% Fibonacci retracement, right? Okay, so that's fine. Let's not keep that here. We do not need it in the analysis. Once price crosses above or below a Fibonacci retracement level, right, that level is no longer valid. So let's not keep it in the analysis for the dollar franc. All right, okay, let's see. Is there anything else that you'd like me to cover, right? Is there any request for any of the other currency pairs, maybe the majors or minors, or perhaps maybe even any other indices or commodities, right? If there's anything else you'd like me to cover. Right, if not, then I'll just bit. All right, sure. All right, great. Thanks, Bob. Thanks for giving a suggestion as well. Yeah, let's cover Bitcoin. That's great. Good to cover a little bit of crypto as well. Right. All right. Okay. Awesome. Okay, so we can see here. All right. After making this all-time high here on in mid-March at around 71,000 or $72,000 mark here, Bitcoin has sort of like ranged sideways, right? Since since mid-March till about the end of June, Bitcoin was just trading sideways here, right? Between as dropping as low as about $58,000 and coming as high as about 71 or almost $72,000 here. However, it has broken out of this sideways price action here, but it did find support just underneath it last week, and it does look like to be rising pretty strongly since the weekend as well, right? So the weekend has been rising pretty strongly as well. Now, when I look across this level here, I see a pretty decent overlap resistance level, right? I see a nice pullback taking place here on 16th of May, another pullback support level here taking place on the 14th of June, and uh, Bitcoin running into a little bit of resistance here on the 21st. So this creates a nice overlap level that also has the presence of a 61.8% Fibonacci retracement. Right, so this retracement level was found from here, starting from this swing high on the 7th of June, going down to this swing low here on the 5th of July, and we can see that there's a nice, this 61.8% retracement level aligns pretty well with the overlap resistance at 65,247, which has been identified as the pivot. So what this pivot is telling us is this is a major resistance area that's accompanied by the 61.8% Fibonacci retracement. So that means should you be long on Bitcoin here, especially since uh, with Bitcoin stabilizing here on at the beginning of last week and rising above 59,000. So if you are long Bitcoin, take note it is starting to approach or is beginning to approach a major overlap resistance level at the 61.8% Fibonacci retracement. So that means targeting your take profit level at around 64,000 to 65,000 is probably a good area to identify. It's a good zone to identify a potential take profit for any long Bitcoin positions that you may have, right? So this could potentially be like your first take profit zone for Bitcoin at around 64,000 to 65,000 here, right? Right. Pivot. Okay. The pivot essentially in this scenario here is actually a resistance, right? In this case here, the pivot is actually a resistance. And then, so over here, we are expecting it to stall. We're expecting Bitcoin to stall and potentially reverse and pull back a little bit. But remember, the pivot can also function as a potential breakout level as well, right? But for now, we've identified this pivot as an overlap resistance accompanied by the 61.8% Fibonacci retracement. So that we're expecting Bitcoin to potentially stall around here this week. Right, so take note the pivot here is actually a first resistance. Second resistance is actually at 71,810, but because it's just terminology, we just identified this overlap resistance as the pivot. So that means this pullback resistance level here at 71,800 then becomes the first resistance. And yes, you're right. I will identify I will identify the major pullbacks and overlap resistance levels first, and then I'll run the Fibonacci retracement. And if I do see a Fibonacci retracement that matches or aligns well with the levels that were defined earlier, then that would mean that we have a much stronger resistance zone, or perhaps even a much stronger support zone as well. Right, okay, now I think we can draw another Fibonacci retracement starting from here. This low on 23rd of Jan going up to the all-time high. We can see here as Bitcoin was falling down, it found support at around a 50% Fibonacci retracement. Right, so we can see here as it was falling strongly here since the beginning of June, we saw it stabilize. Of course, we can see the bottom of this wick dropping as low as 53,251, but generally you can see here price did manage to consolidate and stabilize around the 50% Fibonacci retracement here. And this was also a strong swing low support that had taken place back in the 1st of May as well. So we also had a swing low or pullback support level here that was accompanied by the 50% Fibonacci retracement to identify a strong potential support zone. So that means as Bitcoin was falling sharply towards the end of June, we would have used the combination of this support level here, which is at around 57,500, and the 50% Fibonacci retracement at 56,174 as the potential take profit zone as Bitcoin was falling sharply towards the end of June. Now that prices have stabilized and we see a nice rebound, and if you have gone long on Bitcoin since over the weekend, as we see now is approaching the pivot here, which is accompanied by the 61.8% Fibonacci retracement as well as this overlap resistance here as well. So this now pivot here is going to be used to identify a potential take profit zone for any long Bitcoin positions that you may have. All right, right, Bob. I hope that has I hope yeah that explains or that answers your question, right? So I always look to identify the significant resistance and support levels first, right? It can be a pullback support, pullback resistance, swing high resistance, swing low resistance, or overlap resistance or overlap support. I'm always looking to identify the major support and resistance levels first, right? As mentioned here, right? This is a strong support level. This is a strong support level. I see a nice overlap here as well. So I'm looking to identify these levels first. And then once I do that, then I'll run the Fibonacci retracements and see if any of the levels align well or match up with the predefined support and resistance levels. All right, okay. Right, so we've come towards the end of, or we've come towards the end of today's webinar. Right, I hope this has been a great session for all of you. Do look out for all upcoming webinars by IC Markets for the rest of this week. Right, we've got a combination of educational topics and live analysis sessions such as this. All right, thanks everyone. I wish you all the best in your trading journey this week. Take care, have a great week, and thank you very much for the kind words, Bob. All right, thanks, Shal. Thanks, Ruth. Thanks, Andres, and thanks, Ren. All of you guys for joining as well. Thank you so much. And yeah, take care. Have a great trading week, and I'll catch you all at the next session.